Hi, this is Tax CPA Jim Trippon with TaxCPAHouston.com. Today we're going to be discussing the Federal Reserve's unprecedented coronavirus COVID-19 moves. What are they and how can they help? Well, in response to the coronavirus pandemic, almost every state in the United States has been under some type of mandatory stay-at-home order. And that unprecedented move has caused many businesses, both large and small, to either downsize or close up shop completely. And in response to that, the Federal Reserve Board has taken a multitude of measures to shore up the American economy. So first, a reminder, what is the Federal Reserve? Well, the Federal Reserve's role is guided by its mandate in Congress, and its role is to promote employment and to give stable prices. And the Fed is also responsible for the stability of the federal financial system, including the safety and soundness of America's banks. Now, to pursue these goals, the Fed in recent weeks has been using its full range of authority to provide support for the flow of credit to families and businesses. They do this several ways. So one is interest rates. So since March 3rd, the bank rate that banks pay to borrow from one another has been cut from 0.25%. And this lowers the cost of borrowing in general, but it also reduces the interest income many savers receive. Federal Reserve can also purchase securities. So much like in the financial downturn of 08 and 09, the Fed has been buying a wide range of securities. Originally, they started with $500 billion in treasuries and $200 billion in federal mortgage-backed securities. And it's going to make these purchases open-ended. Also, it's doing things to support small business. So on April 9th, the Federal Reserve opened up two new loan programs, the Main Street New Loan Facility and the Main Street Expanded Loan Facility. And both have received billions of dollars from the U.S. Treasury to protect against losses for existing banks to make four-year loans to U.S. businesses that have at least 10,000 employees and less than $2.9 billion in revenues. And these loans can be deferred for a long time, up to a year. And they've been creating new programs too. There's a term asset-backed securities loan facility to support the flow of credit to businesses and consumers. And this is chartered with creating asset-backed securities and also student loan securities and auto loan securities and credit card securities. And the whole idea of all of this is to facilitate the flow of credit that could otherwise get seized up by this crisis. Also, another thing the Federal Reserve is doing is making U.S. dollars available to central banks around the world so that there continues to be a good flow in foreign currency exchange. This helps our companies export products and also purchase products that we need. And we're making swap arrangements with banks in England and Canada and Japan and Switzerland to make this happen. They're also working with making sure there's adequate funding for healthcare facilities and also protect businesses in case of a drop in consumer spending, which we know is occurring. But because of the speed at which it's doing all these things, the Federal Reserve may need to get more funding from Congress as times go by. So for more information on this and other topics, visit us online at TaxCPAHouston.com.